Hi everyone. Today is Thursday, September the 21st. My name is Anne-Marie Band and this is the Moneyball Morning Report for the Benzinga Pro platform. Well, here's how we always look at things, right? My thought was yesterday, we're still in the buy the dip mode unless we lose a specific level. So what was that level that we talked about? We looked at our candlesticks to the left and we said, hey, listen, if it loses this 44.86 area and it does not recover, all bets are off for the long. And so now we're sitting in a Keltner channel, right? That's this little thing here in TrendSpider, and we are moving down. So let's think about what are we searching for? Now, not why is it happening. Of course, traders are responding to the very hawkish chatter. They did not raise rates, but he said, hey, you guys thinking that we're going to drop rates in the Fed funds futures? You're saying we're going to lower rates next year. You're dreaming. That's not happening. And so people are finally going, whoa, this guy actually says what he means and means what he says, right? And a lot of his chatter was, hey, listen, you got to wait and see. We're looking for conviction out of someone for totally unknowns and known unknowns as well as unknown unknowns. And then we're going to pounce on him if he's wrong and not give him any credit if he's right. So he really is, listen, he's doing a very hard job. Of course, that being said, I don't really believe central banks should exist, but that's just me. We're moving on. It's not about why it's happening, it's about what's happening. So Friday we've got an expiry and the SPX pins on where everybody's sitting really sit about maybe 44.02 currently. We can clearly see there's obviously going to be something building at 43.84. Look at this right here. Oh, I'm moving the entire Fibonacci. That's not good. So let me remove it. And so let's just put a price point in here. We can see that the level near 43.82, going to be looking at for support. It's at the bottom of my ribbon. Last time we were at the bottom of the ribbon, we bounced, but we also made a lower high. So when we have a high and we bounce off a level, but we make a lower high, remember, in the big picture formation, it says there's a short setting up. Remember, doesn't matter if this is 5-minute chart or a quarterly chart for these candlesticks. Here's how you frame out a position. 1, it fails to head higher. 2, it breaks frontline support. 3, it bounces and makes a lower high. Okay, so we might be looking at this going, holy cow, we would have to go all the way. We'd have to wait for weeks and weeks to engage in a short. No, once it loses the level on a longer time frame like this, you can wait for the bounce to fade and then have the downward pressure event that sends you into support zones. But when the ribbon is green, there are always buyers sitting somewhere underneath. When the ribbon turns red, then we have a little bit of a problem. It's the reverse. It's the bounces are going to find sellers. Okay, so what are we looking at today? Well, we've got the job numbers coming out. We've got Philly Fed Manufacturing Index, which should be probably fairly atrocious. And we have existing home sales, which they're predicting should be a rise. Yesterday, we had a draw in oil. There are a lot of things coming up and around. But what it tells us now is we're sitting in a space where we are fading and trying to find a bottom. So what does that mean in terms of the way we frame out the trade? We look at our candlesticks and we say, okay, we're going to be very keen on seeing what happens with the pre-market low. But my suspicion is that if we have a jobs number that's kind of yucky, traders are going to immediately think, you know what? The Fed's going to have to change his mind. because of course it's never going to be, we just have the wrong framework there. A ton of people have had just absolutely the wrong framework there, but let's move on. Here are two things that could happen. One, they're going to say, ooh, the Fed's going to change his mind, and the bad jobs number will make a bounce. Or we get a bad jobs number and we go, oh no, he just said he wasn't going to do anything. I just got to get out of here. The bottom line is, this is the region that should be the line in the sand for buyers to begin to come in the ES, okay? Until that happens, the bounces are still going to be sell zones, all right? And so that's what we're going to look at. Where's going to be the first bounce that gives us a shot? It's going to be that 44.45 to 44.63. Somewhere around there, we're going to have people who have been trapped long that are going to go, I got to get out, okay? Now, is 44.11 a good number? Well, we have a low here, we have a close here, we have a gap and open. Potentially, right? Potentially 44.11 could hold. But remember, if you're looking for 44.11 to hold, here's what the formation should look like. 1, you fail to head lower. 2, you break resistance. 3, you pull back and hold a higher low. So you might go, ooh, there's my higher low. I'm going to go long here. Guess what? Your stop has still got to be here. Because if it breaks the low, the formation is gone and you have to start your count over. Okay? Just a little mechanical flow for you to remember what's going on. For the rest of them, we'll just look at the levels. For the NQ, we're looking at 14,730 to 740. 14,990 is also an area. Look, a close, an open, a low, a wick that recovers. But I think things are fairly sticky, and so bounces are going to be sell zones, and we'll be watching that area around 14,740 or so for the low end. And for the upper end, we're going to look at, hey, how did we close the day? 15,136. We have simply got to get up. 15,160 is the baseline floor for this in my mind. And we shouldn't even be thinking about holding any longs until we get up over 15,350. That's my thought. All right, let's take a look at SPY. Beautiful calendars that we've got here. Let me read what these positions are. Very quickly, we've got the double calendar, and you might be thinking, oh no, it's well below 438. Well, here's the beauty of the calendar. The forward calendar is going to have more premium attached to it because of decay. So we're going to let this fade into its floorboard, which 436 all the way to 432, but we need to close these today. All right, simply because of we've got them for Friday expiration for the longer one and today's expiration for the shorter one, but today's is going to be deep in the money, so you want to sell the whole thing as an entire spread. It's going to be great. It's going to be absolutely fantastic. Love it. So again, here's the number. Floorboard, 432. And some action at 437, 436. That's going to be the first bounce pass right here that tells us whether we are going to turn around and hold. We are looking pretty weak here. I think people are finally going, oh, yeah, about that. And they're continuing to move forward. We'll see what happens there. But again, the floor, 432, to resistance is now going to be 436, 437, somewhere around there. That's what we'll be looking at. For the Qs, a little bit more action to go. Down, we are at 360. 357 is the floor there. 360 is the opening tick of this week here. So this is fairly close, but notice it's very bearish. This formation is extremely bearish. So do not try to bottom pick here. First pass bounces, you're going to run into sellers. Wait until you stop heading lower. And if you go, Anne-Marie, what time frame do I use? How much are you looking at the chart? I say 15 minutes gives you a really good picture of saying, okay, my bounces are still sell zones because I have got very negative slope on my price action. Okay? All right, that's it. Let's take a look at the IWM. Statistically speaking, a lot of weakness could show up here. Also, a lot of people are very short here. So this one might snap back a little faster than the others only because of the short covering that's possible, but the bounces are still going to be sell zones. Listen, we've had bounces as sell zones here forever. My belief is that higher interest rates make smaller companies, it makes it more difficult for them to flourish. And I think it should put weight on here. And people were saying, hey, listen, it's underperformed. It's time for rotation. That's all fine and dandy, but we're really not seeing it. So that's it. Good luck, everyone. Bounces are now sell zones, but traders are actively looking for a floor. What you have to do if you want to trade the long, do not try to pick a bottom. Instead, wait for the chart to base, breach resistance, and then come back and test that area for you to go. All right? I'll see you all on the platforms.